is being sought. Rajesh, on the chart, should he hold on to REC?
Yeah, definitely he can hold the position as stock is comfortably holding about 20-day moving average in the volatile market. Stock managed to hold this 20-day moving average. That clearly shows that there is a strength on the near-term structure also. He can now trail the stop loss towards 605, and if it's hold 605 level for next couple of weeks, then there is a high possibility that again we may see a all-time high trajectory for REC, and possible target 690 to 700 would be there.
Yeah, okay. I'm not sure if Rajesh Agarwal, if you have coverage on this. It's a small company, terribly small, 143 crore. There is still a gravitation of retail investors to some of these names. But have you tracked Ansal Housing? If so, what's the view on it? Kunal is asking.
So I'm sorry, we don't track this.
Okay. In the housing space, then, would you suggest another name that Kunal can look at the current juncture in this current market?
See, we will go for large cap names like Goddess Properties or Sober Developers, even the market leader DLF, which have reduced debt considerably and doing very well. We have seen a lot of news coming in that the premium projects have been taken, bought out in a single day. But one company which stands out in the entire lot is Century Textiles. The name suggests textile, but the major play in that is Birla Estates, which is again a subsidiary of Century Textiles, doing very well on the real estate part. They have a lot of land in the Worli which has been developed, and now they are moving into another cities like Bangalore and all. And this company is going to do very well. I think in next 1 year, 18 months down the line, around 20% upside from the current market price is quite possible.
Okay, we have to slip into a very quick break, and it's a risky time to get into a break, but we have to do it. 10 points away from 25,000. Do stay tuned. We'll be back before you know it. People tend to borrow from their own resources. Welcome back. You're watching Ask Profit, and we are within touching distance of 25,000. In fact, the high point of the day was 24,999.75. That's how close we got to that landmark number for the benchmark Nifty 50. We're in the midst of taking your questions, and in fact, the next one we're taking is from Ashok, and Ashok is asking about J&K India. I must confess that I've not heard of this company. It's got a market capitalization of about 4,500 crore rupees, and it is a manufacturer of heating equipment. Rajesh Agarwal, do you have a view on the fundamentals?
No.
Okay.
Really sorry, we don't.
Rajesh, if you can pull up this counter, J&K India, it is, so I was trying to pull up the chart, and in fact, it's got a market capitalization, as I said, of about 4,500 crore. It's trading at 750. Do you have enough data to talk about the technicals?
So I think this is recent listing stock. I think it's listed in April 2024. The whatever limited data which I have, stock is still in trade to trade, segment. Some reversal has been taken place in the stock. If I analyze on the near term structure, there was a falling channel, but there is some reversal sign on the stock prices. With the limited data, here the immediate support area is placed at around 740. If it's hold 740, then there is a possibility of 830 to 850. This is the immediate target we can see on this stock.
Okay, Sudeep Datta is asking about Larsen & Toubro and whether it can be bought. What is a short-term view? So I'm coming back to you, Rajesh, on the technicals. Larsen & Toubro up and about in trade today, 2.3%. Would you buy at this juncture for the short term?
So after a consolidation of almost 7-8 weeks, now stocks managed to give breakout of that 7-8 week consolidation zone. Looking at the long-term structure, yes, we are holding our bullish view. Now, after this breakout, we believe that, this stock now again, managed to cross its previous all-time high trajectory also. So I think, yes, he can hold the position in L&T. with stop loss of 3,700. Possible immediate target we can see towards 3840 to 3850. And if we can hold it for positional perspective, I think this stock can move for 4,000 kind of target also.
Okay. Radhakrishna from Bengaluru is asking about IREDA, and he's bought at levels of 291, 6,000 shares. It's higher than the current market price despite the kind of run that you've seen in IREDA. Rajesh Agarwal, on the fundamentals, would you hold on to this?
See, I would hold on to just get out when the price comes, because market is in a momentum, it might move up. But on valuation, it's trading at a very high valuation when compared to other players like PFC or REC. Yes, these companies into mainly renewable financing, but then the valuations are very stretched at this point of time. It's better to try to exit at higher levels.
50% in 2024 alone for IREDA. State Bank of India, we've spoken about a few lenders. Rajesh, you spoke about ICICI at the start. We've got Shiva, who's holding for the short term though. His buy price is 830. What are the prospects? You're waiting for the results, but are you anticipating a good set of numbers, 3% up today itself? Rajesh Agarwal, sorry, apologies. Would you hold on the fundamentals?
See, if it's a long-term bet, yes, I can hold on to the fundamentals, and if my funds allow, I can even buy. Numbers have been pretty good in the last 2-3 quarters. Bank has been growing well. Asset quality has been taken care of. Yes, due to results, there might be some volatility in the stock in the near future. Maybe it's, if I'm not wrong, it's on Monday in the next 2-3 days. But still, it's a buy from my side. Any dips should be taken as an opportunity to add.
All right, the next one is Tata Steel, and we've got Shobha from Bengaluru, who's bought at 176.76. I believe she's looking for a short-term view on this counter. What's the view, Rajesh, on the charts?
So stock was under pressure. Even most of the stock metal stocks were under pressure, but some recovery is visible in Tata Steel also. But still, stock is trading below the 20-day, 50-day moving average. I think 168 to 174 is the major supply zone for the stock in this pullback. If at all stock crosses over 174, then continuation of pullback would be there, and then possible target we can see towards 185 also. But at this juncture, still I'll advise to book partial profits around 174 if it's bought at a lower level, or one can keep a strict stop loss of 158 if you are holding the position.
I'm coming back to you, Rajesh, on TCI, Transport Corporation of India. We've got Senthil, who has bought at levels of 950, and he's got a short-term view on the stock. He's bought 500 shares, and he's wondering whether to accumulate at the current price, which is above 1,000. What's the view?
I think he can continue to hold the position for short-term perspective, also with the trailing stop loss of 965. I think there is a possibility that stock may attempt to move further higher to 1,050, 1,100 kind of zone in the near-term perspective. So 960 would be 960, 65 would be the trailing stop loss to hold the position in TCI.
Okay. Ujjivan Small Finance, and this is a question from Karthik. He's not really specified what his time frame is, but Rajesh Agarwal, on the fundamentals, is this something that you would buy, and what would the target be if you have a view on the stock?
See, in fact, I would rather say one should sell if somebody is holding their stock. The numbers have been not that good. Small finance is not doing that well as the main full-fledged, full-services bank. So why not to switch to some better banks like we discussed in ICICI Bank or HDFC Bank, which is very good on valuation. If somebody is looking at a small finance bank, the only small finance bank which stands out is AU. So if somebody wants to invest in small finance, AU would be a better choice. Ujjivan is a avoid.
All right, that brings us to the end of this edition of Ask Profit. It's been an absolute pleasure bringing it to you. Rajesh Agarwal, Rajesh Palvia, you've made my life a little difficult, but thank you so much for taking the time and speaking to us on Ask Profit. With that, it's a wrap on this edition of Ask Profit. This show is brought to you by Indiabulls House, or rather the former Indiabulls Housing Finance, which is now Samman Capital, and they say Jio Samman Se. Do keep watching NDTV Profit. people tend to borrow from their own resources to pay for their kids. The thinking, of course, is and look, this is an Indian concept, is that I take care of my kid now, my kid is going to take care of me down the line. Is that wrong though?
I don't think that today's generation thinks like this. Like today's generation who has kids in 20s, I'm saying, wants to live with their children. So here's what it is. You do that and then you're dependent on your kids, or you be selfish and try to figure out a balance, and then you're living life on your own terms. So I think it's really a question of, how do you want to have your future life, right? Where you may not necessarily be earning to pan out.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with.
Hello and welcome to NDTV Profit. You're joining us on Earnings Edge, and we're here to talk about Bandhan Bank's financials. Of course, the net profit for the bank is up about 47% That's of course supported by a 21% rise on the net interest income. The provisions have dipped a little bit. I have with me Mr. Ratnakumar Kesh, the interim CEO at the bank. Mr. Kesh, welcome to this conversation. Pleasure having you, sir. Different phrase this time than what we're used to every quarter.
Thank you, Vishwanath. Good evening to you and to all your viewers.
All right. Let me start with the profit growth question. Of course, you've seen strong year-on-year advances and deposit growth. That has, of course, led to a strong NII growth. And then, of course, you had the ability to bring down your provisions during this quarter. I wanted you to draw us what exactly this quarter looked like for Bandhan Bank. Q4 was not that encouraging. Q1 looking strong.
So Q4 on an operating level, we did a great performance. The fact that we had decided to write off an old portfolio, so it looked a little muted to that extent. But our momentum of continued growth with focus on quality continues. I think we've been able to continue that momentum in this quarter as well. And if you see every year, quarter one is generally quite muted for Bandhan Bank because of the cyclicality. This year in quarter one, we have been able to marginally grow our advances, which is a good news. And that is because of multiple factors. One of the key one being some of the guardrails that we put in place, let's say in April 2023, in order to improve our portfolio quality. That took a little bit of a time for the market to and the team and the distribution channel to appreciate. Sure. I think that has been consistently improving over the next 4 quarters. And therefore, we continued that momentum in this quarter as well. So that's one important area. Second, I think our focus on improving credit quality and collection efficiency has improved. Although there is a slight bit of deterioration in the collection efficiency in quarter one because of heat waves and some of the other factors. But overall, it's remained quite healthy. And the fact that the portfolio quality has improved, our provisions have come down significantly.
Okay. I want to break this chat up into three primary categories. We'll go with advances, we'll go with deposits, and then we'll come to the operational metrics like your NIM and NPA and all of those factors. On the advances front, 22% year-on-year growth, but quarter-on-quarter not that high. I'm assuming this is because of Q1, as you mentioned earlier, heat waves and a few other issues. Lenders outside of Bandhan Bank have pointed out that elections have led to some amount of slowdown in business as well. I'm assuming that's reflecting in your collection efficiency as well. What is the advances runway looking like for the rest of the financial year?
Yeah, our quarter one is generally, if you see in the last 2 years at least, the quarter one always sees a degrowth compared to the quarter four. This year in quarter one, we have been able to deliver a stable advances growth. That's one. But our quarter three, quarter four continues to be the best quarters. And somewhere in middle of quarter two, we should see the more advances uptake. So therefore, we will continue to see the better quarters in the next three quarters in terms of advances. That you should get to see.
Okay. If you look at the segmental breakup, housing and EEB group, which is your MFI business, those have shown a bit of degrowth. But having said that, on the other hand, retail and commercial banking have actually grown quite strongly. So is there anything that is structurally changing at the bank, or is this just a quarterly dynamic?
It is clearly a quarterly dynamic. And housing, if you see quarter one of last financial year, compared to that, the quarter one of this financial year, there is significant growth. EV, compared to quarter four, there is a degrowth. But again, quarter on quarter, if you see YOY, there is a growth.
Okay.
But of course, as part of a stated strategy, our secured book will grow. And the EB book will grow at a lesser rate of percentages. In other words, retail and commercial will grow at a much faster pace than the EB book. And that's our stated strategy in terms of our product mix and diversification strategy.
Where do you want to see the mix, secured versus the rest of the business?
So I think our FY27 guidance is that we will go closer to 50-50 or maybe slightly higher than that. So our secured book will be more than 50% and unsecured will go down to below 50% over a period of time. But that we have to do in a calibrated manner, keeping in mind the NIM impact and the overall strategic other guardrails and the lead.
Correct. Coming to the deposits question now, of course, year-on-year 23% growth. I'm assuming that's. I don't think anybody else in the industry is growing at that pace, even though your base is smaller than the others. But I wanted to get a sense, on what the deposits division looks like now. Last evening, the RBI came out with its LCR framework, which, it's a draft circular at this point in time, but they're suggesting higher runoff ratios, which may or are expected to, heat up the deposit war that is currently there amongst banks. How are you seeing that panning out?
Clearly, there is a bit of a stress in the deposit market in the banking industry. That's clearly given. However, Bandhan Bank's ability to garner deposits has already been established. Our franchise is very strong. And if you see in the last 18 months, we have added around 500 odd branches. These branches will now start to deliver. That's one. Okay. Second, I think we have finished our core banking migration in quarter two of last financial year. And now it gives us an ability to launch many more products and technology digitization. Specifically on the current account side, we should be able to launch the transaction banking products, whether it is CMS, trade, Forex, and some of those, which are work in progress. And that will really help us to get low-cost deposit in current account. On the savings account side, we are re-energizing our branches. Branch cross-sell is getting augmented. We are launching specific segmented product like women, NRI, and some of these affluent segments. So all of these will hopefully help us to build our momentum on the deposit franchise. Retail plus CASA continues to be very strong at 69, they're about 70%, and we will continue to grow that up.
Yeah. This CASA ratio of 34.3, where do you want to see that growing? What is your appropriate CASA ratio for the bank?
Clearly, our growth as stated in our strategy and is clearly the deposit-led asset growth. And therefore, our deposit book will continue to grow faster than the asset growth. So we will have improved CD ratio and also CASA ratio will inch upwards. At this point in time, given that there is a bit of a stress of liquidity in the market, it will be very difficult to put a specific number, but clearly we will keep improving on that.
Okay. I want to come to the operational bit now. So on the NIM side, you said that there is, you want to grow, but keeping the NIM in mind. Of course, with higher secured loans, you see a little bit of compression, but that the other efficiencies sort of add up. But what is the NIM expectation guidance for the rest of the financial year?
This quarter has been good with 7.6% of NIM, and it is continuing from the previous quarter. So whatever is the increase in cost of funds, we are able to adjust with improved yield. And to that extent, that's fairly strong for us. Having said that, we believe that depending on how the interest rate regime goes and the cost of funds look like, we should be able to maintain in the range of 7 to 7.5%. And that's what we're fairly confident about.
We'll move on to the last question in this conversation, Mr. Kesh. That was regarding the asset quality side of the story. Now, you mentioned that there's been a slight deterioration this quarter. Yes, you've seen your gross NPA ratio to about 4.2%. Some of it is coming from your West Bengal portfolio as well as Assam, if I'm not wrong. I wanted to get your views on the asset quality trajectory. At what point in time do you see this deterioration sort of normalizing, or is this just a Q1 problem?
It is clearly a Q1 problem. If you see asset quality in terms of our DPD pool, that has been coming down consistently over the last 5 quarters. So somewhere in the range of 2,800 odd crores, it's come down to 1,400.
Okay.
In the quarter on quarter from the YOY perspective. So that's coming down. Clearly, the outlook, therefore, is quite positive. Second, I think some of the guardrails that you put in place is holding up. The EV book that we disbursed since April 2023 is holding up extremely well.
Sure.
And we are seeing 5-fold improvement compared to the previous year disbursement that we've been doing because of some of the portfolio quality stringent norms that we put in place. And that has not deteriorated our ability to grow the advances book. That's the good news about it.
Okay.
But as the advance book grows at a faster pace in the next few quarters, in terms of percentages, you should see definitely improvement. But I think we are careful that the DPD pool has inched up slightly in Q1, given some of the factors that you spoke about, like the heat waves and some of the other factors.
Sure.
I think therefore we are to that extent it's a work in hand for all of us in our teams.
Can you tell us what guardrails specifically that you're referring to at this point?
So we had been evolving our credit portfolio, credit quality, specifically in the EB business, wherein we have put dedicated loan officers. The bureau score limits and thresholds have been upgraded in terms of taking higher bureau scores. As also, we have put cooling period in place for the DPD borrowers. And all of these are holding up extremely well. And that's why you will see significant improvement in the credit quality.
Understood. I want to slip in one small question with regard to that audit that was happening, the CGFMU audit. Is it completed now? Are we completely past that problem?
So, audit process is nearing a completion. We have provided all the details, data points, documents, everything, and it's nearing a completion. We hope to see a positive closure soon. But till it happens, we will not be able to put a finality to the date or the outcome as of now. But we are confident.
Sure, sir. All right, Mr. Kesh, thank you so much for joining us on this conversation. Pleasure talking to you as always.
Thank you, Vishnu. Thank you so much.
All right, so that was Ratan Kumar Kesh from Bandhan Bank. He's the interim CEO, of course. Mr. Chandrasekhar Ghosh, the founder CEO of the bank, left earlier this month. And now, till the bank finds its permanent CEO, Mr. Kesh will be taking care of the business. Thank you so much for watching NDTV Profit. Stay tuned for more news and updates.
People tend to borrow from their own resources to pay for their kids. The thinking, of course, is and look, this is an Indian concept. is that I take care of my kid now, my kid is going to take care of me down the line. Is that wrong though?
I don't think that today's generation thinks like this. Like today's generation who has kids in 20s, I'm saying, wants to live with their children. So here's what it is. You do that and then you're dependent on your kids, or you be selfish and try to figure out a balance, and then you're living life on your own terms. So I think it's really a question of, how do you want to have your future life, right? Where you may not necessarily be earning to pan out.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to
Hello and welcome. We are in the thick of earnings, and we continue to speak numbers. We have with us the management of Chola Finance. We have Mr. Arun Silvan, who's going to talk to us about the Q1 numbers. Good morning, sir. It's a pleasure as always to speak with you.
Good morning.
So, sir, just talk to us about growth first off. You guided for around a 25% growth number for FY25. You far exceeded that in Q1. It's been a very strong Q1, which is seasonally, generally, the kind of the weaker quarter for the larger lending industry. Talk to us about what are the growth trends and how will rural also affect the numbers. Can we expect a higher number in terms of guidance on AUM growth?
We have got into multiple products, as you know, and in most of the products we are seeing good growth, especially LAP and home loans, which we have gone geographically wider. Vehicle finance has done a good job this time, but there is still a lot more can be done here because the rural economy, as you rightly pointed out, is yet to pick up in its full earnest. The monsoons have been predicted to be good, and so we expect that to grow well. And we will see growth in the new businesses also, which is the CSEL, SBPL, and SME. These have been growing, pretty steadily over the last year, and this quarter also strong good growth. So we expect growth to be around the same 25-30%. I don't want to commit right now much larger than that. Right now, we will see how Q2 happens. Q2 also is generally a dull quarter because large part of the country comes under monsoon, and also there are some inauspicious periods during this quarter, which tends to reduce the economic activities, at least in vehicle finance and related businesses. So we will watch Q2 and then come with a more, clearer and a more steady growth projections. Right now, let's stick with the 25%. Maybe around 25 to 30% is what we can right now target.
Understood, sir. Sir, the couple of concerns that at least I found, one is with regard to margins. You had guided 7.8 will hold when the last time we spoke at the end of Q4. We're at 7.6 currently. Do you expect that to go back to 7.8 on higher margin products, or you're expecting some bit of tepidness in margins compared to what you were looking at last quarter?
No, we are trying to reach the 7.8%. We will be there, I presume. And as you look at it year on year, the numbers I gave last time also was more from an year-on-year perspective. And we expect the yields to further improve. We have talked about that the vehicle finance book should change its contour with larger, yield share going up as the old book runs off and the new book comes into play. And we have also been doing more of used and the higher yield products in vehicle finance, which should, push the yields up. The rest of the new products will also start, increasing their share in the NIM. So that would also help us to move the NIM. So we should still stick to the 7.6 to 7.8% target for the NIM. Having said that, the cost of funds drop that was expected in the second half may not happen, as you all know, but we are still trying to hold it at that levels right now to make sure that we have these improvements in it.
Understood. So on the provisioning side of things, you've seen a bottoming out. Is this now a revert back to normal, you would call, or has there been a higher provisioning than what you would have also anticipated, because the number is substantially higher?
Yes. See, we had reached the pre-COVID levels in March. This is the trend which used to be in the pre-COVID period, that we will tend to slip a bit in Q1, where because of the large pressures in the Q4, there would be some slip backs in the NCL as well as the NPA numbers, while it will remain at similar levels in Q2 and start improving in Q3, Q4. This used to be the trend pre-COVID, because in COVID period, the levels went up significantly higher and there were these management overlays, etc. coming into play. That trend was not visible over the last 2 to 3 years. But I think we're back to the pre-COVID sort of a situation where you will see this trend happening. You will see NCL numbers reducing in Q2, but NPA numbers similar to what we are seeing in Q1. And in Q3, Q4, you will see both of them improving.
Understood. Okay, so only getting better from here. Is that how you would put it?
Yeah, but you have to wait for a quarter or so.
Sure, yes. Okay.
Improvements will be visible, yes. Yeah.
Sure, point taken. So with regard to capital adequacy, you are at 18% currently. You're growing at 25-30%. I appreciate that profitability likely will continue to hold up, which should aid capital adequacy, but 25-30 is still very, very strong just in terms of your growth. Any plans to raise capital this year?
We don't need to raise capital. If you again observe the capital adequacy in its entirety, you'll see the rundown has been more in the Tier 2, where we had repaid large parts of the sub-debt and perpetual debts over the year, which we have raised. And we have adequate capital in the Tier 1, both from the pure equity as well as on the convertible debentures, which we are holding right now, which will be falling due for conversion shortly. So with these, I think on the Tier 1, we are pretty confident of holding our position much above the regulatory norm and as well as the internal norms we have guided for. But Tier 2 we will be raising. We have raised already in July some parts of Tier 2. We will raise some more as we move through the year. So that would keep the capital adequacy, at an overall level, well ahead of the regulatory norm that's prescribed, and we should be able to fuel our growth with that.
And if one were to foresee, when would an equity raise come into play? Would it be FY26?
No, FY26 is when the conversion of the debentures which we are holding will happen. At that point in time, we will also evaluate. Actually, we have already stated that, if the capital adequacy drops below 17, we would be certainly raising capital and we will do that. But as I said, there is large headroom on Tier 2, which we should be able to tap. That is a good amount of demand for Tier 2. Chola papers are well accepted in the market. So we will do the Tier 2 raising. And if Tier 1 by itself is coming below the threshold of 13%, then we will certainly raise the capital.
Okay. And with regard to ROAs, therefore, your aspiration was PBT ROA of roughly 3.4%, if I recall last we spoke. Would that at all change given the margin, given the provisioning, given this entire environment? Would that guidance at all change?
No, we are still working towards the 3.4, 3.5% ROA pre-tax for the full year. So these are like quarterly aberrations which you would have seen even in the past. And we should be there for the full year, 3.4 to 3.5% pre-tax ROA.
Okay, so I take your point. So on the provisioning side, is there a specific pocket where you've seen pain? Could you talk to us about some trends that you are witnessing on ground, just to help our viewers get context?
See, our vehicle finance book has seen a little bit of a higher provisioning. Primarily, this happens in Q1 and Q2 when the borrowers who are small road transport operators and don't have deep pockets get impacted either because of the seasonality, rains, or in the first quarter for this year, for example, because of the elections as well as the heat wave. But they will come back in Q3 and Q4 when economic activity sort of spurts with festivities coming into play as well as the harvesting coming into play. That's when they have larger revenue in their hands. They will start utilizing their vehicles more than 80-90% capacity, which will give them adequate liquidity or earnings to pay not only the current EMI but also any past dues, if any. So that would help them to reduce their outstandings and delinquencies and also help us to reduce our provisioning and our NPA numbers.
Understood. So thank you so much. It's been a pleasure speaking with you, understanding all of those metrics.
Thank you.
Right. So President CFO at Cholamandalam Investment and Finance, Mr. Arun Silvan. Anyway, with that, completely out of time on this one. Stay tuned to NDTV Profit. We'll slip into a short break. More on the other side.
People tend to borrow from their own resources to pay for their kids. The thinking, of course, is and look, this is an Indian concept, is that I take care of my kid now, my kid is going to take care of me down the line. Is that wrong though?
I don't think that today's generation thinks like this. Like today's generation who has kids in 20s, I'm saying, wants to live with their children. So here's what it is. You do that and then you're dependent on your kids, or you be selfish and try to figure out a balance, and then you're living life on your own terms. So I think it's really a question of, how do you want to have your future life, right? Where you may not necessarily be earning to pan out.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Bro, what are you doing?
I'm
Well, thanks for tuning into Markets IQ. I'm Neeraj Shah, with me is Samina Nalwala, and we are in conversation with Rajiv Juneja, Vice Chairman and MD of Mankind Pharma, on the big news from last week about the acquisition that they have done, and a sizable one at that. So let's figure out the details of this and what it will mean for Mankind over the years to come. Rajiv, good having you. Thanks for taking the time out. This is Neeraj here. Good afternoon. And congrats on this deal. But with the congratulations come the question about why such an acquisition at the current point of time, at the current valuations and the monies that you've paid?
For that, you're supposed to understand that Mankind has always had very, very clear kind of a strategy. On that strategy only, we have acquired this entity. Just go back and see many years, 28 years back, our strategy was going bottom up, covering maximum number of doctors, 3 lakh doctors, 4 lakh doctors we cover right now. That was our way of creating some kind of a entry barrier. Going forward, the second step was in that clear strategy, going for OTC products, Manforce, Praga News, Health OK, Gasofast, Acne Star, all sort of things are there in that, and creating some kind of a entity, some kind of a brand name for Mankind. The next was going in chronic side of the business that we did. 5 years back, the fourth step was opening a new office and starting only specialty business from Mumbai in onco, in uro, in diabeto, in cardio, all sort of things have been done. And naturally, the last step, when you go on the top of the pyramid, you see that you want to enter a super specialty business. Because once you have a big company where approximately 22,000 people plus are working, it's like a castle, and you want to have all the protection, all the security for those who are working, and some kind of a prosperity as well. So what you do, you create high walls, high entry barrier, trenches. I mean, those kind of products you want to acquire, which are very, very difficult to make, which are very, very complex. Some of the products in Bharat Serum are those products where nobody has been able to crack that. Patent is there till 28. Some of the antibiotics are there where nobody is successful in making that. One product I want to mention, that is anti-D. In India, approximately 5 to 7% women have RS negative blood group. And whenever that happens and you want to become a mother, on the third trimester, you're supposed to definitely go for that anti-D injection. It is compulsory. And in the so that the next baby should not have any problem. I mean, problem of brain damage, a problem of this anemia, all sort of things are there. It's a very, very special kind of a company. And that's one reason we have acquired this. So there is a very strong reason for that. Plus, a lot of potential is there to unlock in this company. Once you acquire this kind of a super specialty, entry barrier, and a company which works in one area which is growing at the fastest pace, that is fertility. You go in any city nowadays, what do you see basically?
Sure.
And fertility clinics. There was a time this phenomena was there in bigger cities. Now, even in smaller towns, you find that these kind of clinics are there. So in that way, I mean, Bharat Serum is a very special company. And that's one reason. So there's no other reason. I mean, this is one company we were interested, very keen to acquire 5 years back as well. We could not succeed. So now it's a different entity now. In last 25 years, the able, nice, capable management has turned around this Bharat Serum to a different kind of a company. And that's one reason we have paid this price.
Okay, sorry, yeah, I was about to ask you the same thing, that the premium that you're paying, does that come from the fact that they have specialized products and you mentioned the moat that you have, and therefore you'll be able to, for lack of a better word, milk this opportunity a lot better over the next few years?
Absolutely. I mean, in 5 years' time, this capable management has basically turned around Bharat Serum. But despite of that, just look at 2 years were lost in COVID as well. So there's plenty of potential to unlock. They have flavor of OTC as well, where we are always very keen. They have some products. One is Osopan, one is Lactair for breastfeeding mothers. So who knows tomorrow that these two products can be shifted to our consumer division side. So everything is there in this company. One is chronic, one is a high entry barrier where we are very keen. It's not a branded generic, it's more than that. It is a super specialist entry barrier company which has a product range which is there in infertility side.
Right, Mr. Juneja, hi, it's also Samina joining in. Mr. Juneja, the success of this M&A will sit on execution. And we've seen with Mankind Pharma, be it Dr. Reddy's Laboratories or Panacea Biotech, those are very successful acquisitions from your stable. You mentioned a couple of times that this company has been run extremely well and Advent has done a fantastic job. And while you eyed it when the Daftaris owned it 5 years ago, you didn't pick it up